Hello and welcome back to another weekly commentary from StashAway. I'm your host Philipp, and we have with us again our Chief Investment Officer Freddy.
Hi.
And in today's episode, we're going to be talking a little bit about what's the recent developments been this week. A couple of things on China, right? We had ECB policy meeting yesterday as well, so we'll cover those in a minute. But before that, I have some homework to do. Just wanted to let you know we're honored to be having a joint panel next week on Monday, the 11th of March. It's at 7 p.m. in the Suntec City region. We have a panel with BlackRock together, and we're gonna talk about fixed income ETFs. I know Freddy will be on the panel with someone from BlackRock. So if you want to subscribe to this, please head over to our Eventbrite site and subscribe over there. In addition to that, we also have another event in Malaysia next week. We're going to be talking about how to invest with ETFs, since that's more new thing to do in this part of the world. That is going to be on the 14th next week at 6:30, and again, you can also subscribe to that on our Eventbrite page as well. With that being out of the way, and of course we hope to see everyone there, let's get into the meat of this, and let's talk a little bit about the economic and political landscape that's been developing this week. We've seen the markets come down a little bit, but they had obviously quite a run up to the start of the year, right? End of last year to start the new year. But there was some developments in China. Maybe you can tell the listeners a little bit more about that and how that kind of impacted this week.
We started the week with China officially reducing their forecasts and targets for the GDP from 6.5% to between 6 and 6.5. Markets sort of there's lots of chatters about this. Honestly, it's a statistical noise. Given the Chinese numbers are volatile and the way it's measured, the range is basically just a bit of allowance and leeway for the Chinese official to sort of maneuver themselves with. It didn't really signal that China is going to have a way lower growth targets.
No, so, I think those are the numbers that are always very you should don't take too serious either, right? Because China, we don't really know if these numbers are right. This is the other thing always, right? That's been mentioned.
It's just pure statistical noise the way it's done, and one should not even react to it at all.
Exactly. But so then, based on that, some other news that came out today on China before we get into some of the European stuff was there was quite a drop in the share prices this morning. Can you maybe just give some
Well, I think it's semi-related because key brokerages and even fund managers have came up and officially make a statement to reduce stock holdings, and they have sell ratings on Chinese stocks. And as you know, in China, this sort of moves would only happen when it's approved by the authorities. And in a way, it actually signals to what we said earlier. China is targeting to do more risk management on the economy, not looking for some short-term stimulus to pump the economy, and which is why the sell ratings are being approved. And it's all very consistent. I think that because the Chinese markets are retail dominated, 80% of retail investors is a wild east, and so the authorities would really love to caution the average retail investors from the fear of missing out. And this is one of those moves, and it's entirely consistent with protecting investors.
Correct. No, and then we can go into a little bit of the fear of missing out at the end. But with Europe yesterday, this kind of happened, and then you saw the U.S. markets sell off a little bit overnight, right, because of those news. Can you maybe talk us a little bit through of what the ECB announcement was about, and with Draghi leaving, maybe that was his last. He tried to do a parting gift, right? In
short, Draghi's parting gift is a little bit stingy, according to the way the market reacts. So the ECB has, I think they pledged to continue to hold rates at such low level to at least December of this year. So this is way longer than previously signaled. And also they again reintroduced some of the series of we call it TLTRO. It's really liquidity provision schemes to the banks in summary, and it happens every quarter, and banks can borrow for up to 2 to 3 years from when they take on the loan from that quarter. In essence, it's just another cheap loan for banks. Now, why would the market not react that positively? It's not just the size, it's also the fact that the ECB is doing this, it means there's a reason.
Yes.
So they have reduced their growth outlook for the
I think I think this was the bigger part, right? Because I think, like you said, right, normally if you ease or do something, then something is wrong,
Yeah.
right? You don't want to do that, right? You know,
Yes.
this is exactly the fine line that the Federal Reserve has been
like we have
running
always
around
said, rate
all
hikes
year
happen.
long, right?
Yeah,
Exactly
rate hikes
right.
happen for good reasons.
Right.
Rate cuts happen for a different set of reasons. So I think investors are more worried about the reason behind the sort of very accommodative stance by the ECB. And so that's sort of like we always said, fundamentals always come first, and that's exactly it.
Yeah.
European fundamentals are slowing.
And they are, right?
Yeah.
Quite frankly. So yeah, good. No, but you know, this is a lot of like, you know, kind of like headwinds, right, that the economy is facing.
Yes.
And I think this is kind of what the market is pricing in right now. This is short term.
Yes.
So
It's all short term.
let's think about a little bit more, you know, what can our listeners, for example, what can they do to protect themselves of those short-term news, right? Even though maybe long-term economics are fine, right? Or long-term, you know, everything will be fine. But in this moment right now, when you hear like, oh, the last 5 days the market has been negative, right? What can you give them away? Maybe like something about this, right? Like, because we see this all the time, right? The market runs up, people get into the market, and
Yes,
then it gives
yes.
it a little bit back, and they sell already right away. You know, things like that. Maybe you can give
Well,
us a little bit
we
insight.
have learned a lot all together in the market. We
Yeah.
have learned a lot since December?
Yeah.
What a bad month with all the doomsday news, and then
Well,
January
we've
is
seen
so
twice
good.
last year, right? So
Yeah, exactly.
We've been going through this together. Yeah.
And January was fantastic. Year-to-date returns for S&P, 11, 12%.
Yeah.
And then last 5
Emerging
days,
markets
the
more, right?
worst. Yeah, then the last 5 days, the worst ending again. So I think what we really learned from this is that just ignore the noise in the media, avoid the FOMO, avoid the fear of missing out, stick to your long-term investment plan, right? You have set your goals, you set your contribution per month, you set your risk level, you stick to it. You don't overreact to all this news. And let a diversification help you weather and navigate this sort of situations.
Yeah. So isn't when you say the help diversification, so how can diversified portfolios help in these situations, right? So like, it's, you know, we also have this event actually with BlackRock on fixed income, right? Because especially in this time when the market always goes up, everyone just wants equity, right? We know that, okay, yeah, that's a sexy thing to buy. This is going up, right? But, you know, can you maybe just tell us a little bit how does it help?
Psychologically, when you go through your account statements, you look at all your line items, all the securities, the assets you have, you know, you don't have to have every line item in that statement positive, because they do function differently, right? So even when times are good, it pays to have some protective assets, income generating assets, government bonds, high grade investment corporate bonds, a bit of higher yielding portion is fine, a bit of REITs. The income portion of your portfolio helps you reduce the uncertainty with returns, and hence help you offset some of the volatility in markets, right? So it's exactly at times like this, the income and protective portion of your portfolio, your diversified portfolio, would help you navigate better.
Correct. Because also like the downside is more protected, right? So
Yes.
even if the market goes down 5% of your portfolio might only be down 1%, and you look at it, it's actually not that bad, right? It
Yes.
smoothes out all these things, right?
Exactly.
And make you not overreact
Exactly.
to news in the market. So I think that's really important. That's one of the reasons why we also have, you know, the choice of, you know, giving a portfolio for each one of your life goals, right? You know, you can have that long-term goal, and this might have to have more equity, right? Because
Yes.
you need higher returns. But for more liquid goals, like you need the money in 2 years or 3 years for down payment, or you want to have some, you know, more emergency fund. So this is where you can have a little bit more of those income-producing products in there, right?
Yes, absolutely.
So this is kind of like how we build it. But you know, if you ever have any questions, you know, feel free to, you know, comment under the video. We'll be happy to, you know, get into more details on that in one of the other videos. And again, Freddy, thank you very much for
Likewise.
being with us today again, and giving your advice here to our listeners. So I hope every one of you will come to one of our events next week. We have, again, on Monday in Singapore, we have the BlackRock X StashAway event on how to fixed income ETFs work. We will also have the event in Malaysia next week on how to invest with ETFs. And please go to our Eventbrite page. Subscribe there to any of our events. You can also find them on Facebook as well. And otherwise, happy to email us at support@stashaway.com as well. We will be able to subscribe you there. Okay, so have a wonderful weekend ahead, and hope to see many of you at the next events over the next week, right?
Yes, absolutely. TGIF.
Bye bye.